Let's find some day trades, swing trades, and option trades. Hello, traders. It is Wednesday, August 5th. We are about 2.5 hours into trading. You can see how the market has been defying gravity. Another gap up. Market tried to rally, hit a bit of a compression right in here, which was a sign of resistance. Had another little poke right to a new high, and then we've been backing off since. If we take a look at the 1OP indicator, here's how it played out this morning. We had a nice entry point this morning. Everything looked good. Right in here, you had to use caution. You could see how the market was moving sideways. Then we had the 1OP indicator fall. Typically, you would get the market selling off, but because we had a compression, it told me that we were probably going to make a new high for the day. That was a nice bullish cross right in there. We did, but here's your next warning sign right here. There was a bearish cross right in there. Market has been pulling back. I suspect that we're going to continue to pull back. We'll check the low of the day. I don't believe that we are going to take out the low of the day on the first attempt. Might take a second attempt or a third attempt if it happens. And then if that low fails, we will start to fill in some of this gap. Market's been really flat for the last, I would say about the last month, actually. Yes, we have been barely grinding higher. You can see from this point back in the middle of July to this point, it's been just a back and forth, tiny little candles that suggest that there is overhead resistance. We're not seeing large, massive moves higher. We're just kind of floating higher. Earnings season helped with the mega cap tech stocks. Right now, everyone's expecting politicians to get a stimulus plan signed before they go on recess August 10th. $1.5 trillion is on the table. They haven't quite decided how they're going to distribute that money. But keep in mind, $1.5 trillion is a quarter of what we saw in May and June, yet the economy is struggling. I see some pretty broad issues. If you look at where the jobs are, they're not in technology. And you've heard me say that there are 10 stocks in the S&P 500 that have been up on average 35% this year. The other 490 stocks are down 10%. Very narrowly defined market rally. That's a problem. If you look at where the jobs are, restaurant, retail, hotel, industrials, energy, all of those sectors have been beaten down badly. In fact, energy, we're seeing some oil producers who have missed their bond payments. That's not good. That could bring up a whole credit situation. We have banks taking very large write-downs. That's not a good scenario either. We have retail companies like the Gap is not paying their rent. Well, what does that have? How does that impact the owners of that property? Credit issues, again. Restaurants account for 8% of the workforce. A third of them could fail in 2020, according to a Bloomberg analyst. Those are huge numbers. That's where the jobs are. In the last week and a half, 2 weeks, I've been telling you we got to keep an eye on the initial jobless claims. That is a current number. We have to watch it week after week. It's been trending higher. That's going to be the problem because as this PPP runs out, you're going to have a lot of small businesses that are going to have to lay off their employees. Now, today we got ADP. 167,000 new jobs were created in the private sector during the month of July. That should be a pretty decent number normally. But on this economic rebound, on this quote unquote V bottom recovery, they were looking for 1.6 million new jobs in the private sector. 1.6 million. We only got 167,000. Now, I don't put too much weight into the unemployment report on Friday. It's a government number. It's filled with all sorts of adjustments. ADP processes payrolls for small and medium-sized businesses. They know how many checks they cut last month. The initial jobless claims number, I'm going to be watching it tomorrow morning. If it keeps ticking higher, it's not going to bode well for our economic recovery. We've got 23 million people possibly being evicted from their apartments in October. What happens then? That's a huge percentage of the population. I see a lot of issues ahead, and I haven't even started to talk about US-China trade relations, Brexit, anything like that. So the last quarter, we had the S&P 500 companies, more than half of them have reported. On average, revenues are down 8%. Profits are down more than 30%. Yet look, we are within striking distance of the all-time high. Q2 has completely been discounted. The expectations for Q3 are sky high that we're going to be right back on this recovery. I don't think that's going to be happening, especially with states retreating right now into phase 2 and phase 3. Schools are not reopening. The ones that have tried to reopen, the first day of school, all of a sudden there's a classmate who has the coronavirus. The whole class has to go into quarantine. The teachers have to go into quarantine. We can't have this kind of disruption. If schools don't open, you've got parents who are going to have to stay home or pay for some kind of child care. Raises a whole different gamut of issues. The market is discounting all of this. Right now, it's just focused on this next round of stimulus. I think that once that stimulus plan gets passed, politicians flee DC. They go on recess for 3 weeks. The country is on autopilot while we have riots and the coronavirus spreading. I think investors are going to get very, very nervous. I think we're going to see some profit taking, especially since mega cap tech earnings are behind us and the weaker part of the earnings season lies ahead. We've got a lot of energy companies and retail companies that are going to be posting along with restaurants. So I believe that the market is setting up for a drop. So I have been very, very passive on my bullish swing trades right now. In fact, this is the first time in 6 months that on a swing trading basis, one option members are completely in cash. I'll be releasing my weekly swing trading video tonight. Not quite sure what I'm going to be putting in there, but we may actually have a couple of a couple of bearish trades that we try to put on contingent on the S&P 500 breaking below this major technical support line from right here to right here. We draw that line. You can see how it's coming into play right around that 322.50 level. It's going to take a substantial pullback right now. We are about 100 S&P points above that. Oh, that seems like such a long way away. That can happen in a day. And when we do see these large market declines, what happens to option bid-ask spreads? They widen out incredibly. If it's a 20-cent bid-ask spread right now, it'll go to 80 cents. And so you don't even know where or how to get out of these option positions because the option premiums are so out of whack. Best to be in cash. We'll let the market come in. We'll identify the selling pressure, try and gauge how heavy it is. That'll help us find support, and then we'll be able to enter at much better levels. And that really is the bottom line. Can the market go higher? Yes, it can float higher, but the upside rewards are much smaller than the downside risks. Well, that being the case, let's sit in cash. I am very confident that we will have a better entry point for our longs than where we are right now. And yes, you can try and squeeze the last little bit out of this market rally. But when the shit hits the fan, pardon my French, it's going to be very hard to get out. And you're going to want to make sure that you're not having to deal with losing positions, that you are looking at the market and waiting for opportunities. So I'm going to show you some bullish trades because I have to show you something. I don't have any bearish trades that are lining up right now because the market has been in an incredible bull rally. So all the charts look really, really good, and we don't have any breakdowns right now. So let's go through and see a couple of stocks. Does this mean that, if I'm telling swing traders you have to be in cash, does this mean that I'm not making any money? Does this mean that our members aren't making any money? Of course not, because many members are day traders and we're in the chat room and we have a very short-term time perspective. So we are in and out of trades all day long, primarily on the long side right now because that's where the action has been. So we've had some nice trades today. I showed you a strong after earnings search yesterday. That's a really good one. We'll take a look at a couple of others today. Pop Bull is one of my favorites for swing trades. We'll take a look at the D1 chart, the daily chart. Disney had earnings after the close yesterday. That's a really nice horizontal breakout right there. It's above the 200-day moving average. We've got over 100 million subscribers to their streaming video service. That has sparked some excitement. And I'm really avoiding stocks that are in sectors that are exposed to this prolonged recovery because these job losses are going to impact consumer spending. So, as much as I like the move in Disney today, for me, it's just a day trade. It's not a stock that I would want to hold overnight. Take a look at FCX that has a gold component to it because it is a metals miner. DVN, that is an energy producer. You can see double bottom higher low. It's through the 100-day moving average, has broken out above this downward sloping trend line. Nice day trade. But I don't like the energy sector right now. I think it's going to take quite a while for the energy sector to recover. Eventually, yes, I think that when we get through this little economic rough patch, I think energy will present some excellent opportunities. MA. Now, there's a stock that I like. It's got very little credit risk because they process credit card transactions. This is MasterCard. I like the fact that the stock has been in a compression for quite a while. It's got nice support down here at the 200-day moving average. This breakout at 315 is excellent. You can see how the stock is near its high of the day. In this situation, I like selling. There's your breakout. I like selling the 315, 312.50 bullish put spread for a 50-cent credit. I think that trade looks pretty nice. That's a bullish put spread that you can consider. Where would your stop be? Right at that 315 level because we are expecting that support to hold. And this would be the August 21st expiration. So you're only going out 2 weeks. 2 weeks and 2 days. So that's not a bad looking trade. Keep it small. Nike. Got Nike above this horizontal support level, which is above the 200-day moving average. So there are buyers in here before it even gets down to the 200-day moving average. Buy, 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 buy. Now we're getting through this horizontal resistance level. You can see the earnings release date is 9/22, so you've still got some time. If you're looking to sell a out of the money bullish put spread, it doesn't move much, so the option premiums are not that great. So you've got to go close to the money on this one. I think that $95 strike price right there works pretty well. It's still above the 200-day moving average. You've been able to find support there. So selling something like the 95, 92.50 bullish put spread, that might work out pretty well also. You can see how the stock is through this downward sloping trend line as well. That's good news. So I think Nike can do pretty well. It makes apparel. The retailers are hurting, but they're still able to sell their product online. So Nike, yes, pretty good. BBBY, that's a retailer. Absolutely no interest in that. BAC, bank, finance stock, no interest. When the market does finally roll over, this is probably one that I'll be looking to short. Any of these banks that have exposure to consumer credit, I think will probably make decent shorts. I'm going to go back into the 5-minute chart on the SPY because I want to always be watching what it's doing. And you can see here how it's starting to roll over right here. That check of the opening price, we'll put an alert there so that we know when that price is checked. I'll double click on it. And so now when that price is checked, we'll get a pop-up alert. I think that it's likely that we will test that price level. What happens after that, we'll have to see. If it is a one-time check, and then we find support and kind of waffle around, spend some time there, maybe 20 minutes, 30 minutes, then we'll gradually float higher, probably finish in the middle of the trading range today. However, if we come down and we go right through it on a long red candle on the first attempt, then we're probably going to see additional selling this afternoon. And that's really something that we have to watch. I had mentioned the initial jobless claims numbers, something that I'm watching. From a price action standpoint, I'm watching for late day selling and follow through the next day. When I see that a couple of days in a row, I'll know that the highs are in and that technical support is bound to be violated very, very soon. But you don't want to be early. We've had a 3-month bull market rally. We're in a 10-year bull market rally. Those mean more to me than anything. So trying to find shorts right now, it's very, very difficult. When the market does sell off, it tends to have these violent snapback rallies. So as the market is selling off, you've got to take profits along the way. So let's go back and continue to take a look, see what else we've got on the list. Heavy buying is one of my favorite searches. SQ, really, really strong day. You can see how they announced earnings yesterday after the close. That's what the A means. Breakout through horizontal resistance. Super, super strong trend. This stock on a pullback, yeah, I would definitely like that. Boeing, lots of problems. Good day trading candidate? Sure. Through this downward sloping trend line, bouncing off the 100-day moving average, would I sell a bullish put spread below the 100-day moving average? Heck no. No, no, no. This company has way too many problems. We want to see a stock that's going up, 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 up like this with relative strength, something more along the lines of SQ and MA. Those are the ones that we want to be selling out of the money bullish put spreads on. This to me is just a bounce. When this bounce runs its course, that stock's probably going to roll over and test this horizontal support level. I do not see Boeing as being a good long play right now. Visa, of course, Visa should be doing well. That has horizontal resistance right here. MasterCard's already broken out, so I wouldn't touch Visa. SE, that looked interesting. Semper Energy got a breakout through this horizontal resistance level. It's been on the bullish list from early this morning. Nice gap higher. It's been able to preserve that. Gold is on an absolute tear. You can see how it's backing off a little bit, but that daily chart is super, super bullish. I think gold in here is going to see some profit taking. And if you draw a trend line right here, across these tops, you can see that it has absolutely blown through that resistance level. I think it's getting a little bit overheated, but the volume has been excellent. So it continues to power higher. I think that before gold rolls over, you start to see some of that volume pull back and you start to see gold flatline. Then you'll know that there's some profit taking coming, but I would be a buyer on any dip. You've got the dollar selling off over the course of the last 3 weeks, and that is what's fueling this move. Gold is the anti-dollar. Just going to visually go through this list. Now, there's something interesting I want to show you. Okay, so we've got Disney, that's in the travel and entertainment industry. Boeing, cyclical stock. Keep going down here. Nike, some exposure to retail. DD, chemical company. Energy company. Retailer. MOS, fertilizer company. Retail. Energy. Energy. The point that I'm trying to make is these are some of the weakest sectors. The rally today is based on the laggards. And there's an old saying in the market, the dogs are barking. These are the laggards. When the laggards start to run, that's usually the final push higher in the market. I think we're getting close to hitting that top. And we're close to the all-time high. That Q2 has been completely discounted. That was about as bad as a quarter can possibly be. And Q3 is not shaping up to be that much better because we still have a lot of states that are in shutdown mode. If they're in phase 2 or phase 3, those states comprise about 50% of domestic GDP. So this is not going to be a V-bottom recovery. I'm getting pretty bearish, as you can probably tell. So I'm just waiting for the market to break those key technical support levels. And I'm going to go into one more search here. Now you can see how the market's been down, 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 down for the last 30 minutes. This is a fantastic search to use. Relative strength 30. There are only 3 stocks in it. We already looked at SE. We're going to look at Alibaba. Look at that strength. This is exactly the type of stock that you want to be a buyer of when the market, this is the key, when the market finds support. So if I'm day trading, I need to wait for the market to come in. I need for my 10P indicator to have a bullish cross. and I need to wait for multiple signs of support. And then once the market starts to bounce, let's say there's a bullish hammer or a technical pattern that we're watching, maybe long tails under body, 3 or 4 of those stacked up in here. Okay, with a bullish 1OP cross, I can be pretty confident that the low of the day is going to hold in here, and that tells me that it's time to start looking for stocks that are strong relative to the market. Alibaba would be a perfect candidate. You can see how it's above the high of the day. Look at this strength here. That's what the stock has done while the market is pulling back, and this is exactly the chart configuration I like to have. I've got the stock 5-minute chart here. I got the market 5-minute chart here. I can compare the two tick for tick. I like Alibaba. I think Alibaba is a stock that you're going to be able to day trade if you watch this video and if the market finds support. That opening price right here must hold. A very, very important point. If we take it out, we're going to see bearish price action and we're going to fill in some of this gap. So as long as it holds, starts to bounce this afternoon, I think Alibaba could be a really nice long. We also want to make sure we look at the daily chart. Daily chart looks good. It's got some resistance it's got to get through right here, but already right at this price level, this would be a new closing high for the stock. Because you can see those red candles, that was lower than this price right here. So I like it. I think Alibaba's good. Hadn't even looked at it. UPS, that stock is grinding higher. Not much there. I do like it. I think there's some nice relative strength in it. I think it continues to push higher if the market finds support. ENPH, look at that strength right there. That's great. Those are the stocks you want to buy. So as soon as that market support is in, the stock also has a nice breakout. They had earnings after the close yesterday. Everything's lining up really, really well. We just have to wait for market support. As soon as we see that, we're going to be buying this stock. Set a target, depending on the price of the stock, maybe on a $72 stock right now. If you can get in there, take a 50-cent profit on it, that works really, really well. And just lost COST. It fell off the list. Let's take a look at what that's doing. You can see how the stock rallied up, formed a base. Now it's been able to bounce a little bit while the market's been coming down. There are some buyers in COST. We go into the D1 chart. Nice compression right in here. Big breakout right in there. I like it. COST is a retailer that actually could do well during the coronavirus with everyone stocking up and not wanting to go to the stores very often. So that one works well. Let's see if we can find one bearish trade very quickly. They're very hard to find right now because the market has not rolled over yet. So I'm just going to be flipping through daily charts. That's a failed breakout right there. There's the red candle. Not my favorite. Just looking for anything that looks good. There's one. This is not a bad short. This is the type of pattern that you want. You've got the horizontal support right there, been breached, earnings after the close, negative reaction, stock below the 200-day moving average. GILD looks like the type of stock that wants to go down. I think this could set up for a good short. That's all I've got for you today. Make sure that you keep your trading light. If you are inclined to be long and only trade from the long side, you should keep your action super, super light. If you're a day trader, you can be nimble, you can be in and out of positions and trade both sides of the market here. But if you are not watching the market intraday and you're a swing trader who typically holds for a week, 2 weeks, I think you need to be in cash right here. When the hurt comes, it's going to come very, very quickly. You're going to see these option bid-ask spreads get whacked out. You're going to be sitting on 3, 4, 6, 7 different positions, and you're going to be wringing your hands because you're not going to know where you can get out of any of your trades because the option bid-ask spreads are going to widen out. The implied volatilities are going to explode. You're going to be preoccupied with those trades instead of focusing on opportunities. So, I'm done with that part of my lecture. Please sign up for this YouTube channel. Make sure you turn on your notifications so that you never miss any of these videos. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.